Hello, everybody. Welcome back to Abundant Wednesday. I'm Shelley Hagen. I'm here with my business partner, Nina McNamara. And Nina and I have a guest with us today, Tim Reid, who is a realtor and an investor here in Calgary. And we wanted to take an opportunity to have Tim come in and talk to us about kind of what's going on with the market right now and how does that impact us as real estate investors here in the Calgary and general area. So Tim, welcome. Good to see
Thanks for
you.
having me. Good to see you again. It's always a pleasure.
Yes. Yes. So Nina and I both have known Tim for a while. I've known Tim probably, oh my gosh, 10 years or more, right, Tim? We've known each other?
It's at least that long. Yep. Time
Yes.
flies when you're having fun.
Yes, exactly. And Tim and I met originally through an investment group here in town, and Tim has his own investment group, and Nina, I know, has been a member of his group for a while as well. So we've all, kind of hung out and done different things together. So it's good to have you here, and we just want to kind of hear what's going on with the pulse of Calgary. So with that, I'll turn it over to Nina to go from here.
Right on. Thanks, Shelley. And thanks again, Tim. It's really great to see you. I think COVID aside, I think it's been a couple of years since you and I had a chat. It was in one of the events. I think I remember it was a short-term rental. A couple came in and talked, and it was like, oh, cool. I like this. So, and what I really appreciated is the fact that you, like Shelley just said, you're the pulse. Like, you know what's happening in Calgary, and because you are that realtor investor, you're that whole package again. And I really appreciate that. And when we were chatting just earlier, I liked what you said. What's happening in the investor universe? I'm like, that is so cool. I have to tag that. so
Go for
Tim, what is happening in the investor universe? I think of Captain Marvel right now. So the Marvel universe, the investor universe. So what's happening right now in Calgary? I know things have been pivoting and changing. Can you give us some insight?
Sure. So I think everybody's seen the news, and I always like to delineate what's going on in the media, what's going on in the trenches, because those tend to be two very different things. And that adjusts the mindset of your seller. So when you look at investment real estate, our goal is to buy wholesale, right? Below market value, and then do whatever we do with our business model, and then sell to the retail market if you're doing resale, or keep that property and refinance whatever your strategy is. That the last 60 to 90 days has made things a little bit challenging that way, because as investors, to talk to private sellers or even buy properties on the MLS to look to do whatever your business model is, been a lot more challenging, because when everybody's mindset sort of shifts and they see 30K over list and all these articles, and those articles aren't always Calgary, so they watch the news and they see things happening countrywide, I think causes an interesting sort of skewed vision of what's really going on in even the local market. So that's been really a difference and a shift where, things were going over lists. We were seeing just absolutely crazy things. Like, I got to say, I've been doing this a long time, over 12 years in the Calgary market and other markets across North America, that here in Calgary, we've never seen quite that behavior since before the financial crash. But what really has happened, and I want to bring this right down to the nuts and bolts and the context, is real estate's a cycle. And in Alberta, we have a 7 to 10 year cycle from top to bottom. And it's done this every 7-10 years, the last 60 years. Now, people that don't really realize, we're kind of in the bottom of that cycle the last 6 or 7 years, taking COVID out of the picture. So we've really recovered a lot of those gains we wouldn't have had the last coming out of that bottom of the cycle. So there was some crazy bidding wars, and we've had a lot of competition from people coming in from really expensive markets. So that really drove up the prices, which is good for people to sell. A little hard to buy something after you've sold something, cash your equity out. So now you're in a really tough position as a buyer. Still a seller's market. Things have started to shift a little, certainly. The interest rates going up and economy being uncertain, and people having less savings now because they're going out and doing vacations and doing a lot of those things. And we had sort of this pent up, floodgated demand that went out in the market. So what I like to tell people now is that sort of the gunslinger people willing to pay 100K over list, they're out of the market now, right? They bought houses already. They were owner users, like they were in there in the market competing, and they bought property now. So we've seen things start to just level off a little bit. Like there, we've got a couple areas in town, which are a bit of the rougher areas, northeast, southeast of Calgary, where I was seeing properties that, you take that house and put it in the southwest, northwest, some of the older, more established, really sexy neighborhoods in Calgary, they're in the 550s. I was seeing, bungalow rental product, all original, hitting that 525, 549 mark. Now that's crazy, right? I don't care what you're doing, investor, owner, user, you're going to be underwater on that thing because you're paying too much for it. like that part of town average, that's like 100K above the average. And nothing goes up that quick, traditionally based on fundamentals, right? So that craziness has started to die down. We still are seeing some interesting things now. So because of the rates, because of people getting fatigued, now we're seeing buyers fatigue in the market where people have lost out on 10, 12, 11 offers. They're tearing their hair out. They're like, oh my God, I can't afford a house. Maybe I'm going to buy a townhouse or a half duplex or something like this. And then also the condo market's picked up a little bit. Now condos are the first to crash and the slowest to recover in any market in Canada. That's just, there's lots of them. There's lots of supply and demand is a major factor there. So now we're seeing people go, you know what, I'm going to get in the market. It's clearly going up. And the fear of missing out altogether is starting to get into the market mindset a little bit. So condos are absorbing a little better. In good buildings with good financials, like that always matters. You got a building with shaky financials and it might have a special assessment or something, they're going to be challenging to sell. But we're seeing people shift into those different asset classes and still buying. So the real activity was in that single family house, double attached garage, 3-bed, 2.5 bath, finished basement, big yard, Calgary special, I call it, right? That is the typical house everybody wants. Now, those are getting really hard to afford, so people are shifting into those, different price points, different areas of town. And the other thing is there's nothing new for sale. So builders haven't been able to catch up across Canada, I think, not just Calgary, but their demand for new product is always there. People want home warranty. There's a cross-section of buyers, that's what they're after. So that's not available, so it's putting a lot of pressure on the resale market, the used product that's in the market. So that's the stuff that you can flip, stuff that you can do rent to own. Your distressed sellers are, in that space because you can't really sell it traditionally because it needs work, it needs value add, it needs arrears covered or whatever it might be. I was talking with Shelley about helping people in foreclosure, that type of thing. It's a different landscape now because those properties, regardless of condition, those people that can't afford that other house, they're willing to take whatever they can get because they're moving in from Toronto, Vancouver, other places in Alberta, other places for investment. So we do see a lot of traction right now with investors wanting to come out of those other markets like Ontario and Vancouver because, number one, I think people forget that we've got some of the best landlord-tenant rules here in Alberta compared to other parts in Canada.
Yes.
So that's a huge one, right? We can get tenants evicted. We've got no rent control. All these things really are getting those investors that, pull a lot of equity out of their properties and on their markets going, man, maybe there is greener pasture over there. And they're coming out here to invest because you can actually get a good cash flow on property here versus a lot of those markets have gone so high, you can't even get cash flow unless you put 35% down, and that's commercial rates. Like that's just crazy to buy a house and try and put 35% down. So that's what's causing a lot of influx of investors into this market, also making it a little bit busier for us locals. So this is one point I'd like to make. People that are in this city, they know what stuff's worth. So they know what things are worth, what they were in the past price-wise, where they're probably going to go in the future, and they're not willing to pay more than this amount. But there's these people from other markets that are willing to pay more than that. So it's causing an interesting landscape for local investors because we know the market and we know what we want to pay for something. There's someone else willing to pay more than us, be it an owner user or be it an investor from another province. They can't get cash flow no matter what they do. They're willing to pay a little bit more because their metrics are different than ours. Getting a 2% cap rate versus a 5.5%. Well, they don't care. They're paying 25 grand, 50 grand more than you and I might as a local investor. So that's one of the trends. We're seeing a lot more investor competition from elsewhere than just the locals here. And that's one of the things that's happening. And certainly the costs, right? We've got utility costs, the carbon tax. Like when you look at multifamily sector, a lot of that's kind of getting squeezed. I think that pricing is going to start to correct there a little bit because again, there was that rush of people coming in. And now with rates going up, utilities going up, taxes, of course, all these things go up every year. Rent can only correct so quickly, especially if that building's got some deferred maintenance. So now we're seeing a lot of the what I call the dreamers in the multifamily space shooting for the stars and hoping someone from another market will come in and pay, a cap rate we wouldn't accept here locally in the mix. So I saw a couple sell, recently that were locals that bought some stuff, and there's people out there, locally doing things, but it's going to take bigger down payments now. Interest rates are going up on commercial. The other thing it's really interesting is that the commercial industrial sector here in Calgary is less than 3% vacancy. So that's something that I just looked into the other day for another client. Very strong. Very strong industry in real estate right now in Alberta in particular. A lot of people moving in, a lot of industrial clients, expanding and looking for more space. Warehousing is big because there's new Amazon centers coming in, and fulfillment centers are getting, bigger, and they're running out of space. So I think there's going to be some new supply built in that sector, which there was a little bit over the last few years, but not enough to keep up to the demand curve we're seeing right now, because that's a crazy vacancy rate for industrial product. That means that the developers have got to start putting new product in the market. So office space is actually not quite as bad as you'd think. What you see in the media, 50% vacant. Two factors here is that oil and gas is cyclical. There's big companies that hold space, right? Engineering companies, oil and gas, because they don't want to have nowhere for the people to go. So they still hold some floors, even though they might give some up. So that's still leased, even though there's no one in it. So that's one of the factors. And all of the A-class space in Calgary, it's all full, right? The Bow Tower has probably got like 0.025% vacancy in it, right? That big, beautiful new building they built. But
Yes.
all the B and C class space, which is old and kind of shabby, doesn't have good AC, one elevator, and people got to wait when it breaks. This product is the 50% vacant. So you average it all out, your B and A class stuff is filled right up. Now. So there's been a migration in the office space world downtown from not so great space, a little bit older, into the newer stuff, because there is a lot of new nice product in Calgary downtown, and that's starting to get leased up. Retail downtown still struggling a little bit, but it's starting to turn around slowly now. I've drove around downtown. There was probably 15 vacant spaces for restaurants, this and that. Somebody else has gone under, someone else has gone in. So it's starting to come around. I'm having a heck of a time actually with one client trying to find a bakery space for this gal in the south. What does that tell you? I've called 5 places that fit what she's after, and they're leased. So that's showing that there's recovery in that space too. In the residential realm, I think demand, the sales are slowed down a little bit, 6% nationwide, and it's a little bit less here in Calgary still. But we're going to see slow and steady growth. Again, 10-year cycle. We've already hit the bottom and we're coming up. So I think you can peg back to the normal average appreciation over the next 3 to 5 years, unless something really drastic happens in the marketplace. The interest rate's going to slow some people down, but again, not people moving from other parts of Canada that are $2 million price averages. We're still in the top 10 cheapest markets in the world. I read an article the other day in Calgary. So if that's the fundamental basis of where we're at price-wise, it might seem like it's went up like crazy, but really we've just recovered that growth from the downswing. We've recovered that, loss it back up to where we should be. And we're still, I would say, lower than what the market would dictate based on the population size we have. So that's kind of my general thoughts on where the market's going. But I think for investors, it's going to loosen up a little. It's going to be a bit easier. I think the interest rates are going to probably trigger, tragically, some foreclosures and some issues, because the thing other people don't talk about is I own other, I have a business, I've got business financing and stuff. So this interest rate affects the variable rates on business loans. So all the people that just made it through COVID are probably going to get knocked out at the knees by these rates creeping up. And that's going to crater a bunch of Canadian businesses, which is really sad. And that's going to cause financial problems and cause a range of foreclosures that's going to happen. And I think that's going to create some more opportunities for investors to be able to talk to those folks, help them out, do rent to owns, do terms deals. I think this is going to become a little bit easier over the next quarter here in Calgary, because it was so like Wild West behavior going on there that anyone could stick a sign on their lawn and they could have their dog stand beside it. The dog could write the offer and then off it goes. Right. Was the environment there for a little while. I think that's leveled off now, and we're going to see more of a normalized market here, especially when some of the new completions and stuff like that start hitting the market end of summer, into the fall, because the builders have been chomping at the bit, doing their best to build stuff and get product on the market, because there is demand for that too, and that'll start to lower the craziness, I think, in the resale market, which gives investors more of an opportunity, because you can't really do a whole lot with new product. It's sort of up here in the retail world, and investors operate down here.
Exactly. But you make a very good point. We had been stuck for a long time in the Calgary market after the downturn in 2014-15, and we should have recovered, but other things happened with interest rates and the stress test and a whole bunch of stuff that impacted our market. So you're right. It's good to see that we're finally moving out of the trough and, moving up the curve and recovering somewhat in this, in our market here. But, interest rates changing, probably going to, have at least 2 more increases over the next 6 months to a year. It's really going to impact other areas. So we just need to be on top of it and keep a pulse on what's happening. And we really appreciate the fact that you came. You did a great job giving us a great overview from residential and commercial side as well. Wouldn't you say, Nina?
Yes, I have so many things. It's like, okay, you touched on cap rate, you touched on, vacancy, availability, and rental. All of it is like, wow, this is so awesome. So
Yeah.
I find I've been looking on the rental market on Rent Faster and stuff like that, and things are just going off. Like, do you find the rental are increasing? Because I know
absolutely. And that's a great point. So the rental market in Calgary is crazy right now. So I have some properties in one of the tougher parts of town, and we are getting like 10 inquiries a day. 10 inquiries, 5 phone calls, like it's ridiculous. Not all those people are great applicants, but there are people from, I would say it's about 30% out of town, 70% people here. And the other thing is that there's rental disruption. So all these sales, a lot of them are rental properties, because people that have had a rental property and they're like, I'm not really a landlord, I just had this rented because I kind of had to, they're selling. So all of these renters are getting displaced, which is causing all these people to be in the rental pool. A lot of locals even, where they were living in a place 6-7 years, and now the owners are like trying to cash out, and they're giving notice, and they've got to get out there. So real vacancy rate in Calgary on residential side is probably about 2%. That's not what the stats will show, but the trouble with that, again, retail versus the in the trenches, is the stats that from CMHC and everything, they come from brokerages, right? So you got to think about how many properties, let's say there's 100,000 properties in Calgary for rent, how many are regulated and managed by a professional management company, which is with a real estate brokerage. They report to the board. Now, all the private investors that manage themselves, or they have friends and family and consultants or whatever, they don't hit the metrics, right? They don't hit the stats. So it's really kind of skewed. Like I got a friend who's got an apartment building in a small town in Alberta. He has 20% of the rental product in town. So CMHC will say the vacancy is 20%, and his vacancy is 0.
Right.
So it's a little skewed sometimes.
Yes,
So I would say the real vacancy rate is 2%. CMHC stats would probably report 4 or 5, even though that's not really the number. So the rental rates are going up for sure. There's definitely, upward pressure on rents, because again, they were kind of depressed because of the economy and everything else. But with rising costs for landlords, I mean, you gotta
go up.
Got to raise your rents, right?
Yep,
rent tracks inflation, which is a good thing for us investors, that it does, or at least it should track with inflation. A good tip there: make sure you do your renewals 90 days in advance, and if they can't afford it, make a plan long in advance, because the last thing you want as a landlord is a month-to-month tenancy. A periodic tenancy is the worst place to be for a landlord. You lose all control. Maybe that's a topic for another day, but just do that 90-day notice and figure out where they're at, because if you give them a notice 30 days prior to and they can't afford it, they might not move out because they've got nowhere to go. I've had a couple of those situations recently, because if you're at a rental rate that's well below market, that tenant might not want to leave because they've got nowhere to go that's anywhere close to that price anymore. So just something to consider.
There's so much more, like Landlord Tenancy Act, Alberta, like there's so much. I was just talking to an investor today in Ontario, and he got a 6-plex and they're on $300 under fair market value. I'm like, oh, dude, in Alberta, we could so fix that. But again, that's probably why we are attracting so many out of province investors, is because we do have that flexibility with our Landlord Tenancy Act. But
you got it.
I would really like to have a discussion too another time about the Landlord Tenancy Act and how it benefits here in Alberta, because
for sure. Maybe we'll do a compare and contrast between BC and Ontario and here. On another call, I'd love to do that. It'd be a good topic for sure.
That'd be a good time for sure.
All right, you're hired. You're back.
Yay!
Looking forward to it.
Okay,
thanks,
sounds
Tim.
great. Sounds great. Well, thank you so much, Tim. Our time is kind of up here today, but tremendously valuable information that you gave us. So glad you were able to join us today. And we'll make sure that for our listeners, anyone who's interested, we'll make sure to get all your information out to you so that to them so that they can get a hold of you if they're interested in the Calgary market. So thank you
Awesome.
again for your time. It was awesome.
Thanks so much for having me. Looking forward to next time.
All right, sounds
Thanks.
good.
Bye, Tim.
Thanks so much. Take care.
Thanks. All right, everybody. So thank you for stopping by and listening again today. Have a great rest of your week and happy investing. We'll see you again.
Have an abundant day.